So everybody says ICC doesn't work, but we just made $500 on our funded, and we passed three prop firm accounts. Three prop firm accounts in one day using ICC. So let's break down how we did it. You don't believe me? Go watch my last video. I think it's the second to last video. I posted the funders on there. So let's get to it. We passed three using ICC. Three of them, just so you know. So today was textbook ICC. Textbook ICC. I literally called this play out last night because it's textbook, bro. So, all right, we come to the markets. I'm looking at the charts. I mark up on the hour. Everybody keeps asking that. I mark up on the hour. So, boom. This is what I see. If I'm looking back, I see this. Okay? I see that. But, Trey, why did you put this line right here? Because if I'm looking backwards, I'm seeing that above this line, buyers are in control. There's no sellers above this line. So buyers are in control above this line. So this makes it what? My indication. So what does that mean? So when price comes above this line, we buy. Now, I use fair value gaps, chat. I know what you're going to say. Oh, but that is an ICC. Indication, correction, continuation, that's ICC. But fair value gaps, that's me. A lot of y'all will have questions on, oh, but why does the market pull back when it breaks the line? We should just go straight there. It retraces in the fair value gaps. And let me show you exactly how it does it. So, all right, now I break down to the 15 because I have my line, right? This isn't my trade session. I don't trade till 7:30, and I'm going to show you why. Now, imagine I would have got him right here. Oh, it broke the line. I would have got him right here at 6:15 against my rules. It would have came all the way down here. I would have panicked, and I might have got stopped out, right? Let me show y'all exactly what the chart did, though. So this right here, this box right here that I draw is a fair value gap. Remember, 1, 2, 3 lines, fair value gap. 15-minute fair value gap. That's the fair value gap I use. 15-minute fair value gaps are 5-minute fair value gaps. 15 minutes is more confluence. Now, see how it broke up here? Sorry about that. See how it broke up here but couldn't break it? Understand, this is a resistance point. So pretty much what a fair value gap is, if we're talking stock terms, is big markets, so the people who move the market, right here in this area, bought so many contracts or bought so much stock they didn't have time to put in their orders. So the market will pretty much they don't have enough to move the market up anymore in this area. So they don't have the power to move the market up to go up here, up here, up here. So what they do is they come back to a fair value gap, grab money, and go up. So if you don't understand that, let me put it to you as a toddler would understand. Imagine this red line right here is a wall. This resistance line, imagine it's a wall. At this wall, you try to run into the wall by yourself. You can't run into the wall by yourself, so you go into this fair value gap and grab a friend, right? You go into this fair value gap, grab a friend and say, hey, can you run into this wall with me so we can break past it and even go further? The friend says, yeah. You grab that friend and boom, you break through the wall. So that's a toddler way of explaining it to you. So we're going to say the fair value gap is going to grab a friend so you could break through that wall. So we couldn't break through this wall by ourselves. So we went back, grabbed a friend so we could break through the wall, okay? Now, mind you, this is 7:15, so let's say, all right, 7:30. So I entered off, as soon as 7:30 hit, I saw us break this, I saw us come to this fair value gap and break all the way up here, I entered. So I want to show you exactly, I'm going to get you a chart, I want to show y'all exactly like where I entered at though. I'm going to show, because really I entered like, all right, boom, right here, that's perfect. I think I entered about right here. I was in 2 contracts. Mind you, the reason I do 2 contracts is because I know I'm going to have to put my stop loss like all the way down here. But mind you, that's only 394 points. And if you go to the hour, my target is all the way up here. We do the math on that. What's the risk to reward on that, chat? Hella. Hella, bruh. We do here, put your stop loss down here on this 15, confirm. And then your TP is like all the way up here. It was like a 700-point move or some shit like that, if I remember correctly. Yeah, it's like a 700-point move. We put our stops right here at these bodies. 1 to 8. 1 to 8 risk to reward. That's perfect for me. Now watch this. Remember, we tried to go into this wall at market open. We tried to go in this wall at market open. We didn't have enough malware to break the wall by ourselves. So we go back, grab the friend, place our stops at the bottom of the fair value gap, but grab the friend, and we break the wall with the friend, and watch what happens. Watch what happens when we grab the friend. Watch this. We grab the friend, right? Watch this. Boom. Boom. Y'all see it right there? That's it. That's the play. That's it. That's ICC. And look, we grabbed that friend, and I think we went up all day. We kept going up or whatever. Then we stopped right there or whatever. That's the play. That's it. Your indication because of this high. This is higher than this, so this is your indication. You know, only buyers are above here. Once you come back above that line, you just target right here. It's like follow the leader. Don't make a. Once you find the indication, that your trade's over. You can sit back and sit on your hands. Because once you break that line, you're good. And then if you add a fair value gap in there, put your stops at the bottom of a fair value gap. Now, if you got a fair value gap that's like 500-600 points, we're not going 6, 7, 8 contracts. We're going 2. I risked $400 to make about $800. I'm fine with that. Because mind you, I don't trade every day. And I know my strat. My strat, well, not my strat. Well, strat with fair value gap, that's kind of my strat. But my strat, my win rate is high, 80, 90%. Y'all saw I flipped $6,000 to $8,000. $600 to $8,000 in less than 2 months. So I'm very confident in my strategy. So yes, I'll risk $400. That's actually a 2. That's actually a. I'm sorry. That's actually a. Oh, it's a 1 to 8. So yes, so 1 to 8. I'm risking that. I'm risking that each and every day. I'm risking that. So if y'all are wondering why when you go into that wall or you go into that indication and when your entry, why it's pulling back, because it just doesn't have enough power to go through. It has to go grab a friend. So add fair value gaps to your ICC, and you'll stop getting stopped out. Because most of y'all would have placed your stop right here or right here, and y'all would have got stopped out. And that's all it is, man. This is easy. We called this last night. The market's gonna move how the market's gonna move, man. Just remember it. Off the entry, you're getting stopped out because it's probably pulling back to a fair value gap. It's gonna, and if we break past this fair value gap, it's probably gonna sell off. But that's something for another time. I'm not gonna confuse y'all. But that's all it is, man. Today's trade was easy, man. That's an easy trade. That was an easy, and we moved almost 1,000 points. But that was an easy 747. Or if you went to the wick, 815 points. On my soul, we got 3 funded. We have 4 funded accounts now. We're about to copy trade 4 funded accounts tomorrow. If there's a trade tomorrow, we're gonna copy 4, and it is a trade because this is the next one. What is the indication? Your indication, we broke this high, so that's your indication, right? This is your indication. We come back under here, go back up, aim for here. In the morning session, though. In the morning session. We're not trading the night session. In the morning session. But peace, love y'all. If y'all got questions, leave comments on me.